It's great to have you here. So help us make sense of the moves that we're seeing in the market here. We're up against those record highs, enough to keep the momentum?
Yeah, first off, March 14th, Happy Pi Day. You guys talked about that yet?
We haven't, no.
Okay.
30 minutes
so
in, and
there we go.
Thank God you're here.
Happy Pi Day. So listen, I mean, we've been optimistic. We've been pretty bullish. Let's just put it in context. And now, Jared, you talk about these things. Up 16 and 19 weeks on the S&P, maybe 17 out of 20, 24% gain those 19 weeks. That's like never happened before. So this has been a great run, historic run for a lot of reasons. We can get into some of the things. What caught me this morning, though, that we're still bullish, maybe a little pause would be normal. Yes, inflation's a little hotter. Maybe you could argue the retail numbers a tad weak, but look at claims, 209,000. I mean, just quietly, you hear about these big layoffs, yet there's no initial spike in initial claims. I mean, the consumer is still strong. Wages are still strong. Inflation, we can get into that stuff. But overall, this backdrop is still there. It's a strong economy, and it's still a bull market.
And the continuing claims also down. So, I mean, we're focused on the inflation data, trying to figure out what the Fed's next move is, but the market is always trying to get ahead of the Fed. And for all the bearish calls that we've seen, for all the calls that the market is extended, as you said, we pretty much haven't seen this before, at least not recently. What could put a pinprick in this rally and pop this little bit of a, I don't want to call it a bubble, I'm trying to shy away from that word, but how do we do some mean reversion and get into that?
Real quickly on a bubble, I mean, the last 6 weeks, S&P 500 forward estimates for 12 months are up 2%. That's a really big move. I mean, this has been a big move, but earnings have justified it. So we would say we don't think this is a bubble. But I think it is that F word, right? The Fed. I mean, the Fed next week. We saw on January 31st, that was the last Fed meeting. That's when they really pushed back on 6 or 7 cuts, maybe 3 or 4. Now we're down to 3 or 4. What's amazing since January 31st, what's led us? The cyclical areas. Materials actually has led. Materials has led. Industrials, financials. I mean, that's kind of, I don't know if it's surprising, but it's the message of the market that, listen, we're rallying because the economy's strong. And, we've all done this for a while. Do you really want the Fed to always kind of be in charge? I'd say no. I mean, we know rate cuts are coming. Maybe it's going to be 3 or 4. That's fine. When's the first cut? I think Fed Fund futures, last I looked, was about a 15% chance of a cut in May. We would say it's more like 30 or 40. We're not saying it's going to happen. But, we do have another CPI come in. We do have another 2 PCEs. I mean, as we looked a couple days ago on, core CPI, if you take out ex-shelter, we're running like 2% the last 6 months and last year. We all know shelter kind of is fluky with the numbers, so we're still optimistic that, hey, there's still some cuts coming, but it's all about the economy.
So, Ryan, if they do cut in May, if they end up, your expectations obviously a little bit more optimistic than what we're seeing priced in more broadly for the market. Going off of what you're just saying about broader breadth that we've seen within the market, is that a trend that you see expanding here in the coming months?
Well, we do. I mean, that was one of our big themes this year. Of course, we all know tech and communications did great, this broadening out. I mean, the group that no one's talking about, if you look at the models we run for our Carson partners, we're the most overweight mid caps. Everybody's small caps or large caps. Mid caps are quietly leading that kind of passing of the baton. If you would have told me, 6 weeks ago, Apple be down, Tesla would be down as much as it is, and by the way, rate cut expectations would be pushed back. I mean, I would have said, we might be down, but we're not, right? And again, that's the key thing. So this rotation is so good, nice. The last point on this, Russell 2000 has been tracking in that range. It's starting to pop above. I know it's not all-time highs, but almost there. It's inching closer. We like small and mid to continue to kind of lead really the rest of this year, and we think it's still a bull market.
All right, Ryan Detrick, always great to have you, especially when you're on set here with us. Thanks so much for hopping on with us this morning. Carson Group's a Chief Market Strategist. Thanks, Ryan.